Good morning, traders. It is 8:03 a.m. from downtown Chicago here, 9:03 Eastern on Tuesday, the 5th of September, 2017. Welcome back after our Labor Day holiday yesterday. The markets are back in full swing here as we start the fall session. School's starting today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stands as it stands as we are right now. The market is being led by crude oil up. Crude oil is trading at 48.25, up 96 cents, making a quick pop here in the last 15 minutes or so. Again, it's up 2% currently, followed by the Japanese yen, the U.S. Treasuries, Treasury bond, and gold. Gold's hovering at 1,336. 1,336. This is about as high as gold has been for the last year, and holding steady. The dollar's weaker. The dollar is the weakest of the bunch on my board here, other than RBOB gasoline, which is down 3.4%. As capacity resumes in Houston, refining capacity, the supply of crude oil starts to be consumed, and there's more supply of refined products. Looking at the news flow overnight. Sorry, my throat is something's going on there. Okay. The news flow overnight, not too much to talk about. The key elements are circulate around the Korean Peninsula. South Korea is asking the U.S. to redeploy its nuclear arsenal on South Korean territory as a deterrent for North Korea. North Korea held its sixth and biggest nuclear test over the holiday weekend, and is asking for, is essentially provoking more action from the Western allies. The stock markets, Japan is down, and further than others in Asia. The German DAX is strong this morning, and the China economy is stronger. Other than that, the cryptos, Bitcoin hit new all-time highs over the weekend. And other news just circulates around the Bank of Australia, the Reserve Bank of Australia, leaving cash rates steady. We have a lot going on this week. Looking at the weekly calendar, we have light releases today. We have, excuse me one second. We have durable goods orders coming out at 10 Eastern. We're expecting 1%. That's for July. The prior is negative 6.8%. One of the things that was interesting to note on Friday is the downwards correction of the July non-farm payrolls. I'm not sure if it was discussed by anyone, but the July downwards the non-farm payrolls were corrected down by 41,000 jobs. That is huge. That's a huge miss for the Labor Department. So as the August numbers came out, the correction to July was way lower. But for today, durable goods at 10, factory orders at 10, and we are seeing Fed Speaker Kashkari at 12:30 Eastern, and again at 1:10 Eastern, and that's about it. But looking at the rest of the week, tomorrow we have some numbers out of the European countries. We get durable goods. Well, hang on. Yeah. No, that's today. Tomorrow we get PMI. We get trade balance and ISM. We get Bank of Canada rates, Fed's Kaplan and Fed's Beige Book. Thursday we have the ECB rate. and conference by Draghi. We get industrial production from Germany and the Halifax housing number from the UK, and we get Fed's master. Friday is the busiest day of the week this week. Again, it's a shortened week because of the Labor Day holiday here in the US. But Friday we get the German current account, trade balance, labor costs, UK industrial production, trade balance, manufacturing, construction output, BOE, and GFK inflation. And in the U.S., that's just the European releases. In the U.S., we have wholesale inventories, consumer credits, and we get Fed's Dudley, Bostic, Harker, and ECB's Lycanon. So Friday's pretty busy, but overall the week doesn't have anything really high tier as far as releases. Let's take a quick look. I wasn't here Friday. I was traveling. But if we look at what was expected on Thursday, just for a quick review, the primary hypothesis for Thursday was for a runaway with the gap remaining open, and for the market to push through the 2470 right up here, 2470, and then to settle in the 2470, expecting a sell-off on the close. Expecting a sell-off on the close into Friday morning's non-farm payrolls release. So that's the primary hypothesis. I'm just going back just to see how things responded, and if we look at it if we look at what happened on Friday, we did leave a gap zone beneath us. This is pretty typical. The market has been gapping and going rather than gapping and filling, which is the more used to be the more common way it behaves. Gap, fill, and base, and then push higher. It pushed to 2470, 2474 and a quarter, and then you had your sell-off on the close. So that Hypo 1 worked pretty much spot on for Thursday, and then on Friday we again opened out of range. So we opened just above, pushed into the prior day's range at the top. We hit the closing swing there, and then continued higher to 79.75. Again, if you recall from the trader bites from last week, the fact that we ended up testing and leaving an excess low. This is about as beautiful as an excess low as you'll find in recent history. Very little participation down here. So we fall out of, I know I went through this several times, but it's really important to keep an eye on this. We fall out of these 5 days of balance. We test below and we get back into balance. As I said, the bottom is likely to be in for some time. And we're likely, if the bottom's in and we're back in balance, then we're likely to break to the other side. And since we're breaking through balance, there's a lot of fuel here. To get us back to all-time highs, and we are within earshot right now. So all-time highs, 2488.50, the high on Friday, 2479.75. It is the Monday after non-farm payrolls. Take it easy today. Take it easy. It's likely to be fairly quiet. The Treasuries opened strong this morning and ran up right away. So this is the 10-year note here. You can see that it opened in value and started pushing up in what looks like a weakish drive up. So the opening print is the low of the day. It's the IB low currently at 126.28, and it's pushing higher. It is likely that the market is becoming risk averse into the session. We can see that in the gap down. So currently we have a gap down in the ES, pretty good delta on the selling on Friday, and then yesterday's action, even though the market was open part day, yesterday's action is scrubbed out of my charts. It is considered a non-essential or non-primary trade. The overnight session has okay volume, nothing outstanding, but pretty tight range. We have about 4.5 points is a 4.5, 5.5 points for the entire session, and it's completely balanced. The market is basically agreeing to that 2470. If you recall, 2470 is a big composite volume node right here. Right here, you see it in the composite. A lot of balance up here. And back in the day, a few weeks ago, we basically balanced here for a long, long time. Remember, this is the profile we're back and trading into. This is the point of control, the black line. That black line is at 2470, and it's basically where our overnight point of control is. So the auction is logical this morning, and it is in standby mode. So as we come into the day here, we'll note there's a divergence between the delta, which is not, it's an overnight delta. There's not much volume, but still delta's pretty strong at 5,500 or so, with the overnight inventory short. And so this morning I'm looking for the market to continue this formation here and to start shifting back up into Friday's range as opposed to selling off. Although the treasuries are, again, rallying a bit, showing us that money's moving into safety a little bit, potentially. So that's where we are. Looking at what we accomplished here last week. So if we look at the weekly, last week had some pretty good range. Again, we pushed all the way up from 24.25 or 24.26 to 24.80 or so. That's pretty good range for this time of year. We are leaving this prior week behind. We've ended, so we've had one time framing down on the weekly. That's a trend down. So we're looking for lower or equal highs. Lower or equal highs give us a one time framing down stance. Higher or equal lows give us one time framing up stance. We don't care that the market makes lower highs and lower lows. We're just looking for lower highs to determine how the auction is progressing on the sell side. That ended last week with a big push. We ended up gapping. Again, we left the gap zone behind, and we pushed and we built. One day, here's the Thursday, and then the next day, Friday, we're continuing to trend up. So if I break up these days here, you'll see that the market is pretty strong. Here's your excess low right here. There's the excess low. There's very little volume down here, as good excess lows will create once we get back into balance. Now we're looking to test the other side. I expected it to rest in here a little bit. It did not. It pushed all the way through, and then again we create this gap and we build one day after the next. So what we had yesterday is about 4 days of trend, although intraday, not every day looked like a trending market, but overall this market's very strong. And as I'd mentioned last week, you have to exercise caution if you're short by hedging your risk using options or reducing your position. Hopefully some of you did that. This morning, what are we expecting? So I run out of time here. This morning, I'm looking for the market to open in an open auction out of range. We're opening right inside the Thursday trade, and I'm looking for an open auction to test down and then start to push up. I'm looking for the main rotations to be upwards to start pushing into the prior day's range, so we get into that 24.74 area, likely to test the value low, test, fall out, and then start to hold sideways into the close. So I'm looking for about 7 points of range this morning. I'm not looking for the overnight low to be broken. That's hypo 1. Hypo 1 is responsive up. It's going back into where it was. The only caveat is we are opening inside of this big balance zone here. It's likely to trap us in, so we might not see that big rotation up, but I'm expecting the market to move towards the prior auction, which was Friday, where we were on Friday. The other side is an open auction that swings both ways and then just sits sideways. We end up with a Gaussian profile, a very tight trade, 6 points of range or so. Friday's range, I believe, was about 6 points, 74, 74 quarter to 79.75, so 6.5 points or so, or 5.5 points or so. And so this is expected to be the same today. Hypo 2 is expected to be completely sideways. In fact, I'm looking for it to rally into the close, looking for that push into the close. Now, if the market opens, moves up, and then breaks the opening swing low, this is the better opportunity. We're looking for the gap zone. The gap zone's beneath us. You can see it here. This is the gap zone right there and right there. Then this is the better opportunity. We're looking for an impulsive move down, push, break the overnight low, base in this area, and turn up, and that's hypo 3. This is a likely hypo. The probability of 1, 2, or 3 playing out are fairly equal today, and it all depends on what's coming in through the news. The U.S. government has about 25 days to figure out its debt ceiling dilemma here. The debt ceiling is being held hostage for the Mexican wall and for the termination of the immigration relief laws that came in under George Bush and Obama, and so on. So there's just a lot on the precipice, it seems. There's a lot on the precipice as far as geopolitical risks. So mostly I'm looking for the market to revert back towards 24.74 and back into yesterday's value area. That's the key thing to take away here. I want to remind you that tomorrow, Wednesday at 4:30 p.m. Eastern, I'm doing an extended AMA open to the public, sponsored by Futures.io at 4:30 p.m. The link to register for the AMA can be found on my Twitter feed, twitter.com/FuturesTrader71. It can also be found in the description of this video. If you hit the YouTube link, you'll see a description below the video, and you'll find the link in there to attend. Good luck today. Take it easy. Monday after non-farm payroll, notoriously low volatility and tight ranges, a market that is likely to test your patience. Good luck.